Hey investors, and welcome back to FiscalVoyage. My name is Felix, and today's video we're going to cover two stocks that I sold out completely yesterday. We're going to go over my time that I bought the stock and when I sold it and why did I sell it. And we're going to cover that. We're going to cover some of the dividends that I received from that and talk about it, why was my thought process on selling them. So let's go over those two stocks. But first, if you're new to the channel, make sure you hit that subscribe button and check out my free ebook in the description below, and let's get started. Alright, so let's go over the two transactions I did yesterday. You can see here, this is my TD Ameritrade account. You can see here I bought Apple 2 shares only, about $500 in March 31st. So that was those low. I think the low was the 23rd, but I got in on the 31st. At $255. This was before the stock split, the 4-to-1 stock split. As you can see here, was August 31st. So in that time frame, I've collected 3 dividends. You can see here $1.64. I only had 2 shares. And then this year, I sold out 7 shares of Apple at $143 after the stock split for about a 100% profit there. The reason for that is because I think it's overvalued. We're going to look at that shortly. So I sold 7 shares. I still have 1 share of Apple because I still want to follow it. And I tend to do a better job in following a particular stock when I own at least 1 share of it because I see the earnings. I keep track better of it. So I eventually want to get back into Apple, but as of now, I sold out completely for Apple. And the next stock I sold out completely is also this one, SKT. I originally bought this company in 2019 for 74 shares at $1,400, and then I bought more at $19.90, and I bought more at $16.50. It dropped, and I bought $2,000 worth of more, and in that time, and I bought 2 more shares at $15. In that time frame, I collected dividends. You hear $71. That's in 2019. Then 2020 hits $71, $72. This is before they cut it. And as you can see here this year, I've sold and for a nice profit. I sold slightly under than my original cost basis, but because I averaged down, I sold eventually for a profit. And you can see here, this is, I was buying it around this time frame, and then I bought more here. And then, the Corona crisis hit, and you can see the price dropped all the way to $4. I didn't sell. I still hold. I should have bought more, but with all the shutdown and stuff, I invested in other companies that were going to do well, and I've been paid for that. But with this company, I just continue holding, and you can see here it ran up right now at $16.19. But if we go here, you can see here yesterday morning around 9:40, it was at $20. I sold it for, you saw, $19.70. So I sold a little lower than the $20. And actually today it reached almost 20 as well. You can see here 1988 as of today's morning, about 10 minutes into the market open. So I sold that stock basically because I think it's overvalued. So first we're going to look at Apple. And Apple is also overvalued, and this is the reason why I sold Apple stock. And you can see here, if we do the operating adjusted earnings, let this load here. You can see here in the long term, Apple is way overvalued based on the fast graph of PE around 40, and where it tends to be at a PE around 13.6. That's the normal multiple. So that's a very good indicator in the long term that is overvalued. So we're sure in this time period, you can see here the normal multiple goes up to 16%. This is with the recent, few years price action. And this is when I bought Apple. And you can see here March on the 31st, I bought 2 shares and then eventually turned into 8 shares after the 4-to-1 split. But you can see here it had a huge run up. Here I was thinking about selling it here, but I just continued holding, then it dropped, and then now we're back up here. So this is why I sold out. And it was sure in this time period, Apple has expected to have really good fiscal year 2021. You can see here it's expected to grow 30%. So that's real good. So the company is great. I just think the valuation looks very, very unattractive because the stock could continue to go up to maybe 150, 160, but it's gonna stay here, I think, just scattered around flat for the few years because there's really, the valuation is just so expensive. And it has the potential to go revert back to this mean. Eventually, all companies revert back to their mean. So the mean right here is around 18 PE. And I think it could be around 20 to 25 PE should be the normal new mean for Apple. But you can see here 6% growth for 2022, 4% growth in 2023. So they are expected to go very nicely in 2021, but slowing down dramatically for 2022 and 2023. So this is why I sold, because of the valuation. And then we go to SKT, and you can see here it's kind of the same reason. For this is a REIT, so we gotta look at the free cash flow. And you can see here it had a huge run up. You see here it was from, what was here? It was $6, $5, and then boom, all the way to $17, and you saw $20. This is closing price, monthly closing price. So you can see here, that's why I sold it. It should be around a $11, $10 stock right now. But it's so overvalued because things are opening up. So people are like, oh, REITs, let me buy retail REITs. So that's what's going on right now. So that's why I took advantage of that and sold out completely. If they didn't cut the dividend, I would have sold out, but they did cut the dividend during the March, with the shutdown and things. They suspended it. They eventually reinstated it, but they eventually cut is much lower than the dividend in 2019. So that's why I decided, once I was in the green, because of this huge run up, I decided, let me just sell out and invest in a better, higher quality company. The dividend was growing during the 2020 and earnings were growing. So that's what I, eventually going to plan on doing. Not right now because the market I think is high right now. So those two sales, I'm still have the cash position. I haven't invested anywhere. So I'm just holding it right now to see what the market gives me in the next few weeks or month. So that's the reason why I sold out of Tanger Factory Outlet, ticker symbol SKT. Overall, the dividends, looks safe for now. As the economy starts opening up, people start, shopping now and things like that. I expect the earnings to continue to grow. But right now, with this huge price increase, I took advantage of that and sold. So those were my two recent transactions as of yesterday. Sold Apple and sold Tanger Factory Outlet. Again, Apple, great company. I have their products. Love the company. I just think the valuation is so high right now. And based on their projected earnings growth and things like that, I think it's overvalued. So that's why I sold. I still have the one share because I like to follow it. Tanger Factory Outlet, I sold at a profit, collected a few dividends, but overall the company is overvalued as well, so that's why I sold. I still have some overvalued stocks in my portfolio. I haven't sold out of them because their overvaluation is not so extreme as these two that I'm covered today. But overall, the market I think is overvalued, maybe about 10, 15%, 20%, but overall, these are the two companies I sold today. So thank you for watching. If you're new to the channel, make sure you hit that subscribe button, and I'll see you guys in the next one.